Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? All is good? Hope you're having a good day. We are financial advisors here at Jazz Wealth, one of the only financial advisors that can actually talk about the markets. We manage our own funds here. So if you've ever been to an advisor and you pay them for whatever, and then they buy mutual funds and then you pay for that, you cut all that out here. We call them zero expense-free funds. Expense-free fund. You call them whatever you like. They don't cost anything. Anyways, we're going to talk about the stock market here today, and then also need to point out next week, we'll have the schedule coming up, but we're going to do some meetups in downtown Indianapolis. So if you're in the area and want to hang out, there will be numerous days we'll be hanging out downtown. A really cool place, but you know, we'll just let you decide on that one. Happy to come out and visit and hang out with you. Grab a drink with your old boy and a couple of others here. Anyways, Wine and Wealth last week for our clients was based on the July financial focus. Each month we do a financial focus so that you don't have to spend a lot of time on your finances. Just knock out one thing or a couple things every month and get your dough straight. Last week before that, Eric did some geeky stuff there. Actually, some really cool topics from questions we got from clients that can show you guys are thinking a little bit. I like it. That is the whole thing here. Think about your money. Anyways, we're here to talk about the stock market today, so let's do that. I'm going to go over here. We're going to start by taking a look at the S&P 500. So we got a slight loss on the day. Notice how that line we talked about yesterday is holding steady. That proves that the technical traders are in control. Whether you believe in it or not, right now, they recognize that area. And so nothing happens until we break below that area or significantly bounce off of that area with some convincing news or event or something that causes people to want to buy this dip instead of looking for more. A lot of people are looking for that 5350 number or slightly below that as the better pullback area. We'll find out. You know, tomorrow's the Fed day. We'll see. We got a poll going up there. What do you think? Will they cut this? Will they cut rates tomorrow? Will they cut rates by a quarter point, a half point, or will there be no change? Remember the stats from yesterday that over 90% of those betting on this with their actual money believe that there will be no cut at all. So we'll see. And personally, I'm not going to try to sway the poll there, but personally, I believe that the action really will be on what they discuss going to the September meeting rather than the actions that they take tomorrow. But hey, you never know. Could be a surprise. Bank of Japan and China, they cut just a little bit, kind of a off the not expected rate cut there. But nonetheless, so because of what's coming up and the weakness in some of these other stocks, well, we just didn't have a reason to break down below that today. We actually tested it, recovered, tested it, recovered. And so for the moment, you would say, yeah, technical traders have that eye on that spot. And it doesn't matter what you think. That's what everyone is looking at the moment. So, you know, maybe pay a little attention. Let's go on over to the NASDAQ here. A similar story, but it's pulled back a little bit more, and that's because of the weakness in the big cap stocks. Stay tuned. I'm going to go over that here in just a second to show you what's going on there. This is the equivalent of what the S&P traders are looking for. So we came down to the low end of that uptrend, broke through it, and now we've kind of had that secondary pullback. I think the S&P traders are looking for that going forward. We will see. The Dow a little bit choppy in here in the last couple of days. It would be, well, it would have the most relative strength of all the other indices, maybe besides the Russell. Just, you know, not really falling and pulling back with the rest of them there. The Russell probably gets the award for holding up the best, although it hasn't done much. We had that big blast off there over 9% in 9 days. And then, you know, what are you going to do? That's people right there doing everything that we talk about here. No one likes to chase the price of something too far. Anything in life, right? You'll chase real estate, and then at some point you go, you're nuts. I'm not paying that. It's the same with stocks, with individual stocks or indices, currencies, commodities, you name it, they're all the same. So right now we have this kind of like digestion period in the Russell. There's no doubt that money is still shifting over there, but the bulk of the first round of money that's moved from large caps to small caps has clearly already done it, right? And that's why we see this jostling back and forth as the rest of you try to figure out whether you want to participate or not. If we look over at bonds, somewhat of a quiet day. Yields moved a little bit lower. We're back to the upper end of this range here. We have a series of equal highs and then a series of higher lows. So I don't often like to draw on the charts here, but we're going to do it today. So we've got this here, and then we also have this range. So it makes it, oh, come on, makes it really obvious for people that are looking for where they're going to be taking their shot, right? And that's pretty cool, I think, because, let me get rid of that. I think it's pretty cool because it's a tightening area. So what we were talking yesterday about some of the indices and commodities too, where oil in particular, right? It's in the middle of this wide range. There's like this area up here, you'd probably be happy to see it get through. And there's an area down here, well far away, where you're like, it's not there yet. Well, I like this because what we have is a tightening range, which means we'll have the resolution to what's going to happen sooner rather than later. And my suspicion is that it's going to start tomorrow. Whether you're looking at the long bond or the short bond, they're both getting stronger, which means yields going lower slowly, but surely. So we'll see. Crude oil, yeah, we talked about this, right? So here's the range that we're looking at today. Oil pulls back even more, so we're getting down towards that decision area. That's why we said yesterday, probably not the day you want to buy oil because there's no good reason. Like, why would everyone join you at the same time? Everyone else was waiting for this number, just like you saw in the S&P, which is right there again. So you can see everyone else looking at that area and just saying, give me a good reason. Why should I suspect that this is the price that I need to be in either the S&P or in oil? So there you go. What else? Hey, gold didn't... there you go. That was yesterday. So gold up about a 1.25%, right? Yeah, about 1.25% there, back to highs. There's not much to go on here. It kind of looks like it's setting up for the next little move there. We'll see. And Bitcoin, since all that action really hasn't done a whole lot in the last couple days, I should say. It appears, by the way, that Bitcoin is going to be part of our election discussions this year. So, well, we'll see about that. Hey, I do want to point out something we don't often look at, volatility. And I'm going to use the VIX futures here for that because it's a little bit more zoomed in and adjusted for splits and everything and the roll. So in VIX futures, notice volatility creeping higher. And that makes sense. We've got the market moving a little bit lower and kind of in a sloppy way. However, volatility has reached almost a short-term high here. What happens there? The old saying, this is as simplified as I can make it. When the VIX is high, you buy. When the VIX is low, you go. Right? And so the VIX is high, people getting excited. We've got a market pullback in particular in the large caps and NASDAQ. So you have a reason for people to say, all right, I moved some money into, the small caps. I did what I wanted to do there. Now I'm going to sit and wait. But hey, there's been a nice pullback over here. So you might see a little bit more of that to come. We have earnings still. Amazon and Microsoft and Tesla, right? Some of the bigger names going to be reporting. So we'll see how that goes. All right, your kind of a lesson for the day. Check this out. Just to further illustrate the money moving over to small caps, here is the S&P, the top stocks ranked by market cap. In other words, the most valuable stocks out there, Apple being the largest. It is the most valuable company, then Microsoft, Nvidia, so on and so on. So you take the top 10 stocks and we say, how have they done year to date? Oh, we've loved them. Everybody loved the large cap stocks, right? I want the biggest and baddest of all companies out there. Median returns between them, 22.13% year to date. All right. What about this month? There seems to have been a shift, right? Well, 7 out of the 10 have actually moved lower and by quite a bit. Median returns for the top 10 stocks in the S&P down almost 6%. Money moving out. Where did it go? It didn't go to the Dow. Went over to the Russell, right? So another way to illustrate that. And then if you think, well, how do we know that, right? We can't. Maybe the money went into bonds or something. They're going up, the short-term bond. That could be it. Well, let's look at the smallest stocks in the S&P, the least valuable companies, although still very, very valuable. American Airlines all the way through down to Dayforce being the smallest. Wouldn't you know it? They had the roughest start to the year, down 20% essentially. And month to date, most of them have a gain, and I might add quite a sizable gain there. Median returns 2.27%. I don't know that some of these would be interesting. Maybe some people went down to the really small cap stocks, but at least in the S&P, it's a fun way to break it apart and go, hey, well, there's a clear difference. The seesaw is going the other way. That's pretty much the story there. All right, a couple other things, and then I will take your questions because there's not much to talk about until we get into tomorrow with the Fed meeting. Of course, we'll be here for that, and we'll review everything with you. Where's the poll, by the way? Can I just pop out here and see? Let's see. 64% of you say no cut at all. 36% of you are going quarter point, and 0 of you are saying there'll be a half point cut. So your polls, or your results of 64% are considerably lower than the Fed funds futures market, right? They're at over 90% now. So a lot of you hoping for a quarter point cut. It'd be a surprise cut. We'll see what happens. Hey, do we have a Guess the Dow thing?
We do. Yeah, there's your leaderboard for today. We got Janka, Peter, Mark, Elisa, and Gabriel. Those are your top 5 for today. jazzwealth.com/guess the Dow.
Boy, your desk looks like a mess, man. That whole area.
Oh, that's organized chaos.
Yeah, okay.
Yeah.
All right. Man, is that a mouse pad with our logo on it? Or
That's our old logo. Yep.
there's the old logo. Okay. What's
What
all the crap in the background?
I don't know what you're looking at.
All the way in the corner. What's going on over there?
That's also organized chaos.
It's chaos. Okay.
Yeah.
Looks like
It's
firewood.
all organized though.
Yeah, you know. Should get a cleaning company or something. All right, let's take a look at some stocks in the news. All right, Bank of America. This would be the Buffett effect right here. Look at that. 9 days in a row now that he has been. Well, this would be the 10th day, I think. This is the 10th day of Berkshire Hathaway selling off their billions of dollars in positions there. And, you know, it's, what do you call it, profit taking there? 800 million that they have recently just disclosed. And that's the pressure on that stock. Meta, I thought this was pretty cool. Not really a stock mover here today. But if you look at Meta, AI Studio is something that they've just come out with. The stock, of course, is pulled back as we have talked little by little here. But AI Studio is pretty cool. I kind of got lost in this for a little bit. The average person now can create their own AIs. You don't need to be able to code or do any of that stuff. It's pretty cool. I think that'll grab a little bit of attention there, but I don't know, you know, value-wise, like what have we put into this? Huge, huge expense to make that happen. But that's what's going on with them. All right, Pfizer. There it is. So Pfizer, this one was interesting here. They beat by 30%, 3-0 there. And they said, hey, we found a way to save another $1.5 billion by 2027. So remember last quarter, right in here, they said we found a way to save $4 billion. Well, now they've come back and said, we're going to add another 1.5 billion to it. It's essentially like they're going through their finances like you would at home. And you're like, I don't need that. We can try this. We can save some money by switching to Geico or whatever it is you guys talk about. And we're going to save some money. That's essentially all they did. It's just incredibly complex. And that's what they have done there. So because of that, they said, hey, you guys have some earnings expectations for us. We're going to raise those we're just voluntarily going to raise those expectations by 13% because of the money that we save. If you save money and you're not spending it elsewhere or expanding, where does that money go? Earnings, right? It goes in their pocket, which then goes into your pocket as a shareholder. That's one way to say that. Merck did not say that. They did beat on earnings, but they had nothing to offer. I don't know what to tell you there. They did lower guidance going forward. They don't have a money saving plan. So on a day where Pfizer comes out and they're like, look at us, Merck should have maybe had something there. They didn't have it. PayPal. This is a really cool one. All right. So PayPal's up 8.5%. Now, you know how we do it where like, it'll be like Restoration Hardware and we'll be like, you know, hey, they sold less stuff, but they sold it for more money. And so therefore higher earnings, revenue was obviously higher, although the total of transactions was lower. Well, it's the same thing here. So PayPal has lower total transactions, meaning, you know, you paid somebody through PayPal and they made their little cut or whatever. Well, they did less of them. However, they had higher pricing, therefore they made more money. So it's not necessarily a bad thing. And normally you think, oh, less transactions, the number of users were actually down, but it didn't really affect them yet because guess what? They're made more money off of those transactions. I didn't look further to see were they just larger transactions? What happened there? But that's what's going on. JetBlue, this was a bit of a surprise. They were expected to lose 11 cents. They made 8 cents instead. And this is, check this out. This is despite them having lower total fare charges, right? So their overall fares compared to last year down 0.5%. It's like, okay, well, they still had higher revenues and they actually made a profit of 8 cents a share instead of 11. And part of that is going to be because they're actually pushing out about $3 billion in airplane expenses further down the road. I think it was 2030 or 2031. So that translates into will and is translating into a small gain for them versus a loss that we were expecting. And, you know, we'll see. I think Spirit Airlines came out today with something too, where they're going to start trying to make some more money with some different ideas and all of that. Hopefully they have the money to make it happen because, you know, I don't know if you've seen the price of Spirit lately, but that would be why it was up today about 4.5%. And that was today, actually. All right. Hey, tomorrow you have earnings coming out from AutoNation, Boeing. That'll be a focus there thanks to that air show that they didn't do too well at. Humana's coming out, so we'll hear some from that, and GlaxoSmithKline to follow up with Merck and Pfizer here today. MasterCard, Marriott, T-Mobile, Carvana, and then after hours, Meta is your focus, and then Qualcomm will take a close but second place to the earnings excitement there. We will see what happens. As we wrap up the poll here now, 40% of you have said there will be a quarter-point cut tomorrow. Not sure how to pick that one, but you never know. You never know. 57% say there will be no cut at all. Thanks for playing along there. Remember, the market during the Fed discussion, it always goes one way, comes back, and then goes the other way, right? And it could start down, up, and then down. It's just, I don't know why. We'll point it out tomorrow when it happens. Cute Humor says no cuts until after the election. Ooh, bold one there. So no September cut there? I would be leaning September cut for the start. Not tomorrow, but September. Yep. PayPal's up because I sold out of my position. Yeah, that does happen. Talk to Eric about that one. Mia says the market's going to crash tomorrow, and we're going to celebrate that. I would kind of welcome, not maybe a crash, but more of a pullback, break through that support area there. I would do that. Hey, would you hold off investing in Berkshire due to Buffett's age? Do you think they'll be volatile with his passing? Yeah, there was a thing maybe 3 years ago. No, it had to be longer than that because Steve Jobs passed away. And then like a couple years later, I saw a study on that with the sort of influential CEOs and when they do either step down or pass away. So it's not like a focus for me. I don't know. I don't remember the data or anything on that, but we will see. Guy, I mean, what is he? Talk about living a good life, huh? Meta and QCOM earnings will have more of an effect on the markets than the Fed. Yeah, but that'll be after hours, so maybe the next day. So the impact would be on Thursday for that one. Hey, I can't see grinding retire. I think you're saying 3M. But I can't see the symbol because there's like a little heart in the way. What happens if I click the heart? Oh, you guys get a heart. Okay. Yeah, 3M. Okay. So I don't like these. I don't chase that. I don't think there's anything wrong with participating in something that's strong. I just don't like paying up for something. I would rather wait, just kick myself. Darn it, I missed it or I didn't have enough or whatever, and let it settle in a little bit personally. Where should 3 6-month bond yields need to be to hint at a rate cut? They're already there. It's already there. They've already priced in 1.5 cuts for the rest of the year. Oh, wait a minute. It's still 1.5. Yeah. And that's the short term there. That's the 10-year, not the 3 or 6 month. But it's the same correlation and price movement there. Look at everybody hitting the heart. I'll hit you guys back. Pow, 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 pow. I never knew that was there. It just kind of cuts off one of my questions. Hey, we'll be back tomorrow. Of course, we'll do this all over again. We'll talk about the Fed. We'll go see what happened there. Probably not a lot in terms of the adjustment that they make, but the commentary afterwards and sort of how Powell words what September is going to look like. It is largely expected that he will use every word possible besides directly saying, yes, we will cut in September. So we will see. Enjoy the rest of your day or evening, and thanks for keeping us in mind. JazzWealth.com. Adios. When you wish upon a star, makes no difference who you